Hi guys, welcome to my channel KP Financial and Strategy Review. Myself Praveen Kumar. In today's video, I will be discussing some of the important components of cost accounting and cost and management accounting and reporting. Coming to topic, I have segregated the entire subject of cost and management accounting and reporting into 4 parts. As you can see very clearly, it is easily understood by each and everyone. Number 1 is what do you mean by cost and what is costing, what do you mean by cost accounting, and what do you mean by cost and management accounting and reporting. I will give you in a short summary, nutshell. Cost is nothing but it is the amount of expenditure incurred in order to produce a given unit of product or a service. Costing is nothing but it is an application of tools and techniques of costing in order to determine what is the cost of a particular product or a service at a given point of time. Cost accounting is nothing but it is a method or it's a process of accounting for the cost that begins with recording of incomes and expenditures and as well as cost details and ends with preparation of cost sheets and as well as cost and management reports for the purpose of ascertaining or determining the cost of a product to fix the selling price and as well as to know the profitability or loss of each particular activity or a product or service, and further for the purpose of cost control and as well as cost reduction measures. CMA is nothing but cost and management accounting and reporting. This is an advanced level of costing, and there we will discuss about management reporting and management accounting and management strategies and models. We'll discuss in detail going forward. And prima facie, this entire costing subject, there are different methods of cost accounting system, and prima facie these are the 4 major methods we can find which are very relevant everywhere. Number 1, and based on the nature of industry and based on the sector of the industry and based on the business nature and the purposes and their operations, and based on that the method of costing will differ according to the business to business and industry to industry, sector to sector. So here first will be job costing or batch costing, marginal costing, joint and byproduct costing. Number 2, this is mainly for manufacturing or any kind of fabrication services, etc. Number 2, contract costing and operating costing. This is mainly applicable for service industry or civil services or civil contracting businesses or construction businesses or even or other kind of transport businesses or any kind of service sector industry where they can use this operating costing models. Number 3, standard costing variance analysis. This is a quite natural and mainly applicable for manufacturing industry. And number 4 is nothing but process costing, which will be either continuous process costing or stage wise process costing, and which will be further segregated into activity based costing based on the number of activities consumed by at each stage of production. So prima facie all these methods will differ based on the method of industry, based on the nature of the business and the purpose of the cost information you require. And furthermore, why all these are required? Why? Because if you see from financial accounting, financial reporting point of view, there will get profit, there will get sales value and cost value. Whether what is the profitability, what is the loss, you can get from the financial reporting. In financial reporting, you will find the first item as a sales, but in order to that is nothing but in financial reporting whatever the sales are reported in the financial record, that is nothing but based on the recognition of sales entries, based on the recognition of the sales invoices. But prior to that there is a base work, there is some techniques and there is a certain process has been done which has been completed prior to the financial reporting or financial accounting, that is nothing but cost accounting and cost reporting. Here what is the cost of a particular product, what is the cost of a particular service, and what should be the approximate selling price considering the target profit of the management has decided, and what will be the profitability of this particular product or service if you sell in the market. All this can be all these are possible only through cost accounting and cost and management accounting and reporting only. So here, even though selling price of a product or service depends upon or influenced by the market conditions outside which are beyond the control of the management, but even then prima facie management and everyone should be aware of what is the cost of this particular product. Why? Because they, in order to undertake this particular business activity, in order to undertake this particular process, first they should be aware of what do you mean by cost and what will be the expected cost and actual cost, what will be the expected selling price and what will be the targeted profit. So whether we are going to make a profit or whether going to incur a loss, they should be having this information well in advance before taking off activity or manufacturing of activity. For the purpose of cost accounting is required. And furthermore, if you want to make a cost control or cost reduction, cost and management accounting and reporting is a vital and essential. Without that, is not possible. You can say through financial accounting and reporting also cost control, cost reduction is possible, means generally that is not possible, for which cost accounting and cost and management accounting and reporting is prima facie, with an essence this is required for the purpose of cost control and cost reductions. How they will control and cost reduce and cost control and cost reduction, how it is possible, we'll discuss in detail. But prima facie, through budgetary control and standard costing, they will go for cost control is possible. Cost reduction is nothing but here reducing the cost of an item without impairing the quality and the suitability of the product. Without reducing the quality of a particular product or service, if you can reduce the cost of an item or service, then that is called as a permanent cost reduction. This is possible by cutting down and controlling all kind of wastages and reducing the ineffectiveness and inefficiencies in the material cost, labor cost and overheads. This is possible. And if you see from relations point of view and controls point of view, the total cost of a product will be segregated into 4 parts. Number 1 will be material cost, and number 2 labor cost, number 3 expenses, and which will be further segregated into direct and indirect material cost. Labor cost will be further segregated into direct and indirect. Expenses will be further segregated into direct and indirect. And all direct cost will be forming a part of prime cost, and all indirect expenses will be forming a part of overheads. We will discuss in detail in shorts in next video. And coming to variability and if you see from further the relationship behavior, the cost will be segregated into fixed and variable. Fixed is nothing but at a given point of time, at a certain level of volume of production, all cost will be fixed, that will not change the volume of the output. That is called as fixed. And if we change according to the volume of the output, then it is called as variable, and variable will be further segregated into semi-variable and semi-fixed. And controllable and non-controllable means generally fixed costs are called as a non-controllable in short run, and variable cost is called as a controllable in the short run, but in the long run all costs are nothing but controllable cost only. Clear? Now coming to cost classifications, and a cost classification will be segregated into manufacturing cost, general administration cost, selling and distribution cost, and research and development cost. Manufacturing cost is nothing but in order to manufacture this particular product, what is the total cost incurred? That includes direct material, direct labor, direct expenses, any other factory overheads, manufacturing factory overhead, that everything will comes under part of manufacturing cost. General administration cost is nothing but this is the cost incurred at a regional office level or a corporate office level or even at a plant level, but these are the department which supports indirectly or ancillary to the manufacturing process, which are not directly involved in the production of a particular product or process. Selling and distribution is nothing but after manufacturing of this product, these are the department which are involved in order to sell this product, in order to make a distribution and dispatch of this product to reach the customer. That is nothing but sales and marketing department, logistics department, transportation department, or outward sales and logistics department. Everything comes under selling and distribution. And where finance will fit under general administration department as a support function to manufacturing and as well as support function to selling and distribution. Research and development is nothing but these are the department which has been generally focusing on conducting research and development of a particular product or service. Then whatever the cost incurred will be segregated into research and development. From a financial accounting point of view, whether it will capitalize research cost or will capitalize only development cost, that will be subjected to the respective accounting standards prevailing. We'll discuss later on when the time comes. And number 4, if you see from overheads point of view, all direct expenses will be forming a part of prime cost, and all indirect expenses will be segregated in the form of factory overheads, general administration overheads, selling and distribution overheads. As I told you, all direct material, direct labor, direct expenses which are directly involved, attributable to produce a particular product or service, that is all that called as a direct cost, that's called as a prime cost. And those expenses which are incurred at a factory level, which provides a ancillary support to this manufacturing process and as well as to support this primary cost, that's called as factory overheads. Example will be like steam or utilities, factory overheads, or depreciation for the plant and machinery, everything etc. comes under factory overheads. General administration, nothing but these are the departments or the units which provide a support to this factory and as well as enter process. This will be like legal department or HR functions or IT functions or finance functions etc. And selling and distribution, nothing but these are the departments which are involved into can be segregated into two parts: those which are directly involved into the selling and marketing, and number two, those which are involved in the dispatch of this material to the customer through outbound logistics departments, etc. So hope this is very clear. You understood the entire nutshell of the summary of cost and management accounting and reporting. Thank you very much. Stay tuned. I will be posting series of videos very shortly.